This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
He's back.
I'm back. We're back.
We are back. There's a lot going on last
There's
week.
a lot, yeah. I try, when I go on vacation, I try to ignore the news, but...
I know you, though.
This last week was pretty bonkers. I kind of felt for you.
It was a lot of stuff. We had several shows where I think we didn't take any breaks at all. Like, it was kind of crazy. Having said that, I feel like a mellower Monday, although we're kind of getting ready for a lot of things to come, especially when it comes to earnings.
Yeah, and one of the companies right now that's certainly in our radar is Apple, because the stock rally, as Apple hits a record for the first time this year, also as U.S. earnings reports mostly beat street expectations. We're going to have a lot over the next 3 hours when it comes to how companies are looking in the current and upcoming quarters.
Can I just tell you, Apple's just up 5% this year, compared to some of the other Mag 7.
Well, look what it's doing. Look what it's doing to the indices.
I know. It's definitely providing a lot of support. All right. We're going to dig into that. As Tim mentioned, we are going to look at those quarterly earnings report. On that, Zions Bancorp reporting after the closing bell. This is one that we've been talking about a lot over the last week. We're going to talk credit concerns more broadly, maybe touch on Zions as well, with Meghan Robson. She's head of U.S. credit strategy over at BNP Paribas. So she's coming her way in just a moment.
Plus, we got to check in on everything happening around the world as U.S.-China trade talks drag on. We're going to talk mining and global access. Gary Evans is back with us. He's CEO of United States Antimony. You were saying, Carol,
yes,
how well the stock has done since we last spoke to him back in August.
Off the charts. And having said that, William Blair out with a call on these mining and rare earth companies, and that whole sector's on fire. So we have a lot to ask Mr. Gary Evans.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here's Alexis Christoforous in for Charlie Pellet. Hey, Alexis.
Thanks very much. We're holding on to this strong rally here. We have got the Dow Jones Industrial Average now up by about 540 points. All three major indexes, by the way, up better than 1% today. And again, this is on Optimism about earnings. We're in the thick of it this week with lots of big name companies still to come this week. Companies including Netflix, Coca-Cola, Intel. The list goes on. About 85% of the companies in the S&P 500 have beaten profit estimates, and that's, of course, helping to fuel this rally. We've also got the S&P 500 up by 78 points, and the NASDAQ Composite rallying 340. Small cap stocks also doing well today. The Russell 2000 up nearly 2%. Interesting to see gold continuing to rally as investors pile money into that safe haven, despite this big rally we're seeing in equities today. So gold is up better than 2% now, near record territory at $43.48 the ounce. We've been talking about Apple all day long. It has hit its first record high of the year. This is as Loop Capital upgraded the stock to buy on more positive iPhone demand, both here and in China. We've got shares of Apple up better than 4% right now. And also Paramount Skydance looking to reportedly shed 2,000 jobs later this month. Remember, Paramount and Skydance came together in that $8 billion merger in August. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flashback to Carol and Tim.
All right, Alexis, thank you so much. Alexis mentioned Apple. In case you forget, it's about almost 7% of the S&P 500. It's about 8.3% of the NASDAQ 100, and it's more than 10% of the NASDAQ Composite. So when you talk about what you mentioned, Apple definitely giving a lift, Tim, to the overall market.
So $3.9 trillion, a cool $3.9 trillion market cap.
It's like...
Not the biggest company by market cap, but among the biggest companies, no question.
It's crazy.
It's massive.
Right? Or maybe not. I don't know. We're going to find out.
I remember when it was a tiny $1 trillion company.
Oh, remember when?
Wasn't even that long ago.
Just a little while ago. All right. Hey, folks, we're going to keep an eye on Apple today. We're also keeping an eye on what is a very busy week for earnings. Tesla, Netflix, GM, among companies reporting. Of the 58 S&P 500 companies that have reported so far this earnings season, this was kind of coming into today. Nearly 85% have beaten analyst forecasts, while almost 14% have missed. As we mentioned, some of those that are still to come: Intel, Tesla, Coca-Cola, IBM, as I mentioned, also the automakers, Tim, coming our way this week.
Well, with more on the earnings picture and expectations, what we have to look forward to. Back with us is Rob Haworth, Senior Investment and Strategy Director at U.S. Bank Asset Management Group, joining us from Seattle. Rob, you heard one measure of at least performance from these companies that we've heard from Carol just now. Close to 85% have beaten analyst forecasts. What's your view on how these companies have done, what we've heard from them?
Tim, Carol, it's great to join you again. It's been a very solid start to earnings season. We've really only had the major financials really report. They are doing very well. We probably can't expect that sort of 20% earnings growth to continue. I think overall with the first round, right, we're seeing kind of on average 16% earnings growth. That's well and ahead of the 8.5% expectation coming in. We probably can't maintain this same pace. But it is still a very constructive earnings season, and we think we should probably see that continue as we push through the rest of the earnings season, because we've certainly seen solid consumer data, solid activity data. So this should be a fairly solid earnings season is how it seems to be shaping up.
Wait, clarify. So we cannot expect it to continue at the 16%, or we can expect it to continue?
Sorry. Yeah, great point. The 16% seems relatively robust, but we are well ahead of, doing double pre-quarter expectations seems like that's maybe a little too good to be true at this point, particularly because you had such strong growth coming from the financials. So we might see it ebb a little bit, but it still appears to be a very solid quarter at this point.
So square this for us with a weakening consumer, or maybe a labor market that isn't on as solid footing as it was, let's say, 6 months ago. Potential concerns about tariffs eating into consumer budgets too. Just how do we square this with what we've heard or will hear from companies?
Well, I think, and that's some of what we're looking forward to hearing from them about. Certainly as we think about the airlines earnings we heard about already, still very solid behavior there for consumers when it comes to airline stocks. From the financials, we heard about very solid behavior. So on the one hand, we're looking at a softer but not weak labor market. On the other hand, it still looks like with low jobless claims across the states, we still, people are still employed. So that means they can spend. They may not be accelerating that spending ramp, but they're still out there and able to spend. And I think that's what's really giving this market and these earnings some support as we move through the quarter is, yes, there's some weakness, but a lift from the Fed, business stimulus from the One Big Beautiful Bill Act early, and then upcoming consumer stimulus as we look into the new year from the One Big Beautiful Bill Act during tax season. It seems like if we can make it through this next quarter, which we seem to be doing, there's some room for improvement even next year.
Rob, I want to stay on earnings, but let me just go back for a second, because we're going to, in just a moment, talk a bit more about credit with Meghan Robson over at BNP Paribas. Having said that, I want to just counter you, because one of the stories we talked about a lot on Friday is how car loans have gone from the safest consumer credit products to among the riskiest over the last 15 years, as delinquencies rose more than 50%, driven by soaring car prices and rising interest rates. Anybody who's tried to buy a car lately knows that it doesn't feel like there's any kind of budget-priced cars out there. But let me push back, because you sound very optimistic about the consumer spending, but aren't consumers, certainly at the lower rung of the K, if you think about the K-shaped economy, they're feeling stretched. Are they not important in terms of earnings?
They are important, but what really matters overall is the total amount of spend. And what we've seen so far is the upper leg of the K is certainly what's been carrying this consumer. There's certainly risks. I think the good news for the lower leg of the K, I hesitate to call them that, but for the lower income consumers, they still have jobs. So they may have some stress, but as long as they have jobs and incomes, we should be able to muddle through, right? There's certainly a risk, but stress in, say, the auto loan market doesn't necessarily translate into contraction in employment. And that's really going to be the key moving forward, is as long as we're seeing people still have jobs, this is a workable situation.
But it does make me wonder when I look at the U.S. yield curve, and again, we're going to talk credit in just a moment, but I got a 10-year that's still below 4%, Tim, and it makes me wonder, are we starting to see some weakness in terms of growth, or does this make it a little bit easier for maybe somebody who's got some adjustable rates in their life?
Rob, day 20 of a government shutdown, hard to believe that's where we are at this point. It's among the longest of them. It could go even longer, of course. What is the effect of that on the U.S. economy?
Yeah, and the longest, as you point out, Tim, is 34 days. So we're not, we're a couple of weeks away from hitting the longest stretch here. It certainly has some modest effect on the economy in terms of a slowdown. But some members are getting paid, right? Some of the benefits are getting paid. We saw the military get paid at mid-month. So we're taking back some of the pain from this government shutdown through that. But certainly it'll be important to get through this just for confidence as we look forward. But I'd highlight the federal government and federal government spending tends to be a very small portion of this economy compared to the consumer. And so unless we start to see consumer impacts or consumer frustration, the economy should be able to muddle through, even if it slows a bit in this fourth quarter, if it doesn't grow as fast as we'd expected. And keep in mind, we're coming off a 3.8% annualized rate of growth in the third quarter. In the second quarter. Into the third quarter, right? Third and fourth quarter, we may see something somewhat slower, but it should still be enough for us to see slightly positive growth, and then the government will reopen at some point, and we'll see a recovery there.
Rob, very quickly, 25 seconds, the AI trade, AI-related earnings, the big Mag 7 companies, are they going to come through this quarter? Very quickly, if you could, when it comes to earnings.
It does seem like there's room for that. And in particular, it's the investment spending that continues apace. So we're looking forward to hearing more, but the early indications are strong for earnings to continue.
All right, good stuff. Rob, thank you so much. Rob Haworth, Senior Investment Strategist at U.S. Bank Wealth Management, joining us. Senior Investment Strategy Director at U.S. Bank Asset Management Group, joining us from Seattle. All right, we're going to kind of stay on earnings, but really, dig into whether or not we're seeing any kind of credit concerns. And we have a great voice on that, Tim.
I want to bring in Meghan Robson, head of U.S. credit strategy for BNP Paribas. She joins us here in the Bloomberg Businessweek studio in New York. We're going to hear from Zions Bancorp a little later today. It's one of the regional banks that have been on our radar because of credit concerns, along with Western Alliance. The firm saying that they were victims of fraud on loans to funds that invest in distressed commercial mortgages. Have those concerns altered how you're looking at U.S. credit?
First of all, thank you for having me. So there's been several headlines, not only in the regional bank space, but also in a few recent bankruptcy filings. From our perspective, we are still constructive. So we see these as idiosyncratic factors, and I can get into that. But I think credit still has two forces that are supporting it. One is cyclical. So you have the Fed cutting. Our economics view is that we're cutting into a growth environment that will be okay. When that happens, credit spreads usually stay tight. And then secondly is a secular force. So we've talked about it a lot on this show and others, just the supply-demand dynamic. As you mentioned, the 10-year at 4%, that's still relatively elevated. So you have relatively low supply, yield demand still strong, and despite some of these headlines, credit spreads have not really widened out that much. And I think those two factors are what's held us in here.
Wait, so do you feel really confident about your view in terms of the economic outlook? Because why do we cut rates if we're feeling pretty good about the economy?
It's a great question. So I think that Powell did recognize that his reaction function was changing, and not only the unemployment rate was important, but also the change in payrolls. So we are definitely slowing into an economic growth backdrop. But I think what's key for some of these factors being idiosyncratic or more broad is the earnings picture. And yes, we've had some idiosyncratic factors. We think in auto loans, consumer subprime loans, those sectors are relatively small though. So look in US high yield, subprime loan lenders, auto loan lenders, it's 2.5% of the index. When you typically see weakness spreading and really causing a default cycle, it would have to be coming from a bigger sector. So think of 2016 when energy really drove defaults, that was 15% of the index. So kind of lower income consumer is much smaller.
What about real estate though, if that's a problem, which is then takes me to Zions or Western Alliance, right?
Yeah, so real estate, I think it can be very bifurcated within consumer lenders, actually mortgage servicers and originators. It's a sector we really like. We think that has lower exposure to kind of lower income consumers. And as you see rate cuts, you'll have this free cash flow that's relatively stable. So I think you have to pick your spots. When it comes to the regionals, we'll learn a lot this week about provisions for credit losses, what I think will be important. But look at last week. The Big Six earnings very strong, beating expectations, capital markets activity, very robust. And so I think you still have positive loan growth. All those factors are still broadly positive in the financial sector.
What about concerns big picture with private credit and the idea that in the world that we're in the economy that we're in right now, we don't have the same transparency when companies go and raise money from private credit firms or firms offering money that don't have the same disclosures as the big banks? Concerned at all?
It's a great point, and it is a concern. I think that a big implication of some of these events that we've seen is they are private companies. Investors are starting to get skittish that, wow, we don't really have the insight into fundamentals as much as we would like. And so a consequence of this could be a higher risk premium for private companies, those that don't disclose as regularly as the public names. And you've already seen, if you look in the high yield index, we have a risk premium between private companies and public that has risen by 20 basis points over the last few weeks. So I think there is a recognition among investors that there should be a bit of a higher a premium for not having that transparency into financials.
One thing I want to ask you, if you look, somebody pointed this out to me, and that if you look at some of the big private credit firms that play in the private worlds, like Apollo's down 23%, KKR is down 18%. I know there's a lot of folks that play in the private market world. I don't know. Why are they down? If private credit is so wonderful, why are they down?
We track the BDCs, so the business development companies, which you can track on as through an equity ticker, and you have seen broadly, those names are down about 20% since July. We think a lot of that is related to rate cuts. So those companies pay a dividend to shareholders, which now will be gradually lower as we see rate cuts come in. I do think also these private credit issues are also lingering underneath the surface and have exacerbated that. So we expect the dispersion to continue in the BDCs. One trade we do like is owning the credit of the BDCs over the equity. We think the credit can be more stable.
You get paid before the equity guys.
And it has outperformed. We expect that could continue.
Well, let me ask you though, because I feel like I don't want to be exclamatory or, Chicken Little, the sky's falling in. But with the great financial crisis, it's like we all went along for a while. And then all of a sudden we realized this is really bad. And there were systemic problems. So, are you seeing any signs of real distress when it comes to credit markets? And I know there's a lot of variations and a lot of different exposures, but any signs of cracks?
There's two things that we would look for. One, which I already mentioned, was a more material earnings drop. I think two, we really have to watch the impact of the tech sector. And if you look at private credit, the sectors that have grown within that are very tech heavy. So there is a scenario where you have AI, potentially these larger AI hyperscalers, replacing some of these smaller companies or making business models obsolete. So I think those are two key risks that we're watching to suggest that contagion would be spreading. But for now, we're not seeing it.
And I guess earnings certainly within that sector is going to be really important, because I know last time earnings around justified a lot of the AI spend, certainly among the big hyperscalers, but we'll keep an eye on it. Thank you so much.
Thanks
really
for
appreciate
having
it. Meghan Robson, she's head of U.S. credit strategy for BNP Paribas, joining us right here in studio.
Hey, some breaking news crossing the Bloomberg terminal just in the last couple of minutes. EQT has been holding talks with potential acquisition targets, including Collar Capital, as the PE firm seeks to expand its secondaries business. People with knowledge of the matter said. The company's held exploratory discussions with several firms, including Collar Capital, HarborVest Partners, and Pantheon, as it looks to buy a business specialized in secondaries investing.
EQT is up about 5% here in the market trade. When we come back to the Magnificent Seven on our radar, one with a big problem over the weekend, the other one, we'll tell you.
It's 2:21 on Wall Street. Everyone, I'm Alexis Christoforous, and stocks are higher across the board on optimism over those upcoming trade talks between the U.S. and China, and on hopes that this government shutdown will soon end. It is now in its fourth week. Traders also waiting for earnings reports from big names this week, including Procter & Gamble, Intel, Coca-Cola. We're also going to get that delayed CPI inflation report on Friday. The Dow Industrials up 536 points, led higher by Apple. Apple after an analyst upgrade. Apple today up better than 4%, and that is on an analyst upgrade. The S&P 500 gaining 77.5 points, and the NASDAQ Composite up 339. We also have gold back in record territory, up 2 1/3% at 43.48 the ounce. Amazon says its Amazon Cloud computing service is still recovering after connectivity issues persisted throughout the day. This is impacting several popular websites and apps, including Coinbase, Robinhood, and Facebook. And Tesla shareholders being urged by a second major proxy advisor to vote against CEO Elon Musk's $1 trillion compensation package. Shareholders vote on that package November 6th. Tesla out with earnings Wednesday after the bell. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
All right, got it. Alexis, thank you so much. All right, so my Netflix was out.
What are you doing watching Netflix on a Monday morning? That's what I want to know.
No, it was last night.
Oh, okay. All right.
And my
Just
husband's
making
like,
sure.
did our daughter like
Is she
try to
stealing
get
the
in
account?
from a different account? The poor kid gets blamed for everything. And it turns out, no, and you had issues.
Yeah, our Ring camera is still offline. I mean, how else am I supposed to spy on my neighbors?
Tim was constantly like, hey, look, you're really kind of funny.
It's not working. I don't know what to do.
My husband did the same thing. He's like, look what's happening outside our... I'm like, stop. Anyway, we've all had problems, and we all know why now. It has to do with Amazon. Alexis was just talking about it.
Yeah, AWS is the world's largest cloud provider. You know this. The company saying issues continuing to plague its operations after a widespread outage degraded services for a range of customers, including government agencies, AI companies, and financial platforms. Shares of the company, they've actually traded higher today, up 1.3% right now. We got a great voice on this.
Yeah, Sarah Frier is with us. Let's head to our Bloomberg News bureau in San Francisco. She's Bloomberg News Big Tech team leader. She's also author of No Filter, the Inside Story of Instagram. Sarah, what exactly happened, and why are there still problems?
Well, when a large chunk of the internet is reliant on one service, there are all these cascading effects, right? They said there was an issue in a database that was loading incorrectly, and that just had this domino effect for a large portion of the internet. A third of cloud computing services are on Amazon. So when something is fixed, and they do say it is fixed now, it does take a while for all of those errors to resolve. That is something that is people will still feel the effects of for a little while. But it's so funny that you said the stock is going up. I mean, this is a moment where you realize how crucial Amazon is in our web infrastructure and our governments and so much about our lives. So it is a sign of their power, if nothing else.
But is it also a sign of our reliance on 1, 2, or 3 really large companies? If an outage at a single company can disrupt such a diverse array of services that so many people rely on. I mean, we were kind of joking about Netflix and the Ring camera, but government agencies are experiencing outages as a result of this. There are issues with dispatching taxis, for example, in some cities right now as a result of this. What does it say about our reliance on single pieces of technology?
My train to work was late this morning. It was like only one track was working, and I was like, oh, is this related to the Amazon outage? Like, I just kind of assumed. I don't think it was, but it is such a good reminder of how that concentration of power is a threat to things getting done in an economy. Remember, CrowdStrike last year went out and planes were grounded, and so many things stopped working. That was a huge cost, billions of costs to the global economy when that happened. So I think that there's really something to be said for the threat of this kind of problem, and it's probably a cue to the hackers of the world that this is a vulnerability, right? That's why it's so important for these companies to have really fast response, quickly pinpointing the problem when something goes down. One issue that may be in our future, right, is more code is written by AI. When big services like this go down, will the engineers know where the problem is, and if it was written by a line of code that they didn't actually write? So I think that that's sort of like when you think about risk to these kinds of outages in the future. You have to think about from the very beginning when you're building the system, how safe is the system as it grows and as more services become dependent on it.
Yeah, great. Happy Monday, everybody.
Hope your Netflix works tonight, Carol.
I hope so. Actually,
you got to stop refreshing it from the studio computer, okay?
It actually came back on.
Maybe it's blocked at work, and that's what it is. You shouldn't be watching it here.
Binging. No, this was last night. We did get it finally on, and we were able to finish binging a certain series. Okay. Whew.
I'm not even going to ask.
Don't ask. Sarah Frier, thank you so much. Bloomberg News Big Tech team leader, author of No Filter, the inside story of Instagram. All right, from one Mag 7 to another we go. Apple shares hitting their first record of 2025 after Loop Capital upgraded the stock to buy from hold, becoming the latest firm to cite positive iPhone demand trends. And then Tim, we heard about Apple's latest generation of iPhones. They seem to be selling well.
Yeah, off to a faster start than usual. Its most basic model surging in popularity. With our Monday Apple Roundup, Bloomberg News managing editor for global consumer tech, Mark Gurman is with us. He's in the Bloomberg News LA bureau. Mark, I want to start with the stock because it does seem like the optimism that we're seeing with the trade with Apple is giving some momentum to other companies out there, certainly lifting the major indexes. What's your view on Apple hitting its first new record of the year?
Yeah, a couple things to note. One, this is old news. We've known for several weeks now that the iPhone 17 Pro and Pro Max have been a hit. We've known for some time now that the base level iPhone is a hit. They made major changes on that consumer model. You have the faster refresh display, the better cameras, the larger screen size, et cetera, et cetera. The Pro models, first redesign in half a decade, got that orange color, which I happen to like. They're doing very well. Second thing I'll say is I just continue to find it fascinating. I know I've been in this space for a decade now in the financial news space, that a firm can come out, they could say, we predict that the stock price is going to XYZ, and then the stock follows, right? Stock goes up. Anyone could just shout out and say, I think the price is going to that, and see what happens, right? So these are predictions. They're not set in stone, and there's really no way to know how the stock is going to go one way or another. We don't know what the different ramifications are of different political policies and what can happen in the world at the drop of a dime, right? So it's really a coin flip to know where this stock price is going to go, or really the stock price for any company. So that's my take and 2 cents on that.
I just think it's worth pointing out, because I don't think Mark would do this himself, but oftentimes when Mark does report news that nobody knows, it does move Apple's stock price.
It does.
So it's not just the analysts who do that, but Mark's reporting often does that.
You know, I was going to come back at you, Mark, because, you know, we do have with this call out from Loop Capital that not everyone is sure that that early momentum for the iPhone justifies Apple's valuation that's out there. Shares trading at more than 32 times estimated earnings, well above their 10-year average of 22 times. You are not a financial analyst, but your reporting does move the share price. But you do know what's coming in terms of products, services, fundamentally.
Well, they all use my reporting to make their reports.
There we go. I like it.
What do you say about those that are concerned about valuations? Again, you're not a financial analyst. I'm not asking you to give me a buy, sell, sell or hold or whatever. But you understand kind of what's coming at us from the company. There are drivers out there, right?
I think I can give you a pretty good idea, actually, if you should buy, hold, or sell. But I won't give that black and white. But I will tell you that the product pipeline that they have is phenomenal. I think the foldable iPhone coming at the end of next year is going to raise ASPs quite significantly. I think you're going from a device right now, a Pro model that costs around $1,000. You're going to see phones starting at $2,000 from Apple at the end of next year. And I think that's going to do wonders for ASPs and overall revenue. They're going to expand the product portfolio, that's sort of that other product segment, with the new slate of smart home devices. They're going to compete with Ring, their parent company Amazon. They're going to compete with Google, Ecobee, and a bunch of other companies in the smart home space with this new smart home display coming in March. They're going to come out in the following year, in 2027, with a robotic smart home display. This is actually a very popular product category right now. It's growing and it's becoming increasingly popular, I should say, in China, tabletop robots. So if you're a smart home user or robotics fan, this is something that I think is going to be fairly compelling. You've got a foldable 18-inch iPad in the pipeline for before the end of the decade. You've got multiple different variations of smart glasses. So in terms of hardware, you're going to see a pretty rapid and broad expansion of the hardware lineup. You have the new Siri coming out this spring. Then you have another update to Siri coming at the end of next year. And then another update to Siri coming the year after, trying to get something closer to ChatGPT. They're looking at a bunch of acquisitions. So, you know, we're on a very solid path in terms of Apple right now.
A $2,000 iPhone.
You take your bet based on that.
Okay. So a $2,000 iPhone, Mark, I think would make a lot of people balk at just the list price there, that headline price. What does Apple need to do, or what do carriers around the world need to do to make that more digestible, to break that up so people actually spend the money but don't realize they're spending it?
Yeah, I think that issue has been solved with installment plans from Apple on their credit card in the US. I think it's also been solved by the carriers in terms of their trade-in promotions. And I think people understand that pricing is going up. You know, one benefit, I should say, with the tariffs is it's given Apple some air cover. Even if they're not being hit by tariffs directly, it's given them some air cover to do price adjustments. And so I think the general consumer understands that because of tariffs, because of inflation, pricing is going up, and so it gives them some air cover there. And they're not going to be the first at this point. When Apple came out with the $1,000 iPhone 10 in 2017, they really were the first to hit that, you know, massive, at the time, pricing threshold. Now it's sort of whatever. And I think pretty soon the 2000 is going to be pretty whatever also.
You know, we've always talked about Apple, and we're always so concerned about how much exposure they have to one big product, and that is their phone. Are we still worried?
Oh, yeah. I mean, at some point, the iPhone is going to need to be not replaced, right, but succeeded, right, with the iPhone still sticking around. It's kind of like everyone thought the laptop was going to die because of the iPad. And then everyone thought, you know, maybe the Apple Watch would cannibalize some things. The only real cannibalization that we've ever seen in the history of Apple, in my viewpoint, is the iPod, where the iPhone killed the iPod. But nothing has killed the Mac. Nothing's going to kill the phone. You're always going to have that pocket device. You're going to see fewer people use the laptop because they've got the iPhone. You're going to maybe see fewer people use the iPhone because you have the smart glasses, but you're still going to probably want and own and buy all of them, right? And so that's the tricky needle Apple needs to thread, but I don't believe the phone is going away.
Man, I miss that iPod Shuffle.
Weren't
that
some
thing.
parents giving them to their kids so that they didn't have to have a phone, but they could play around with music or something? I thought I saw some story. I don't know. Tim's looking at me like I'm crazy. Cray. Mark Gurman, Bloomberg News managing editor for global consumer tech. Apple, now a $3.9 trillion market cap company.
It's 2:40 on Wall Street. I'm Alexis Christoforous, and we have got stocks rallying across the board, despite the fact that the government shutdown has now dragged on into its fourth week. Traders are optimistic over those upcoming trade talks this week between the U.S. and China, and ahead of a fresh batch of earnings reports this week from the likes of Netflix, Coca-Cola, Procter & Gamble, Tesla, Intel. It's a long list. The Dow Jones Industrial Average up better than 1%, or 528 points. The S&P 500 climbing 75 points. You've got the NASDAQ Composite up more than 330. Gold also rallying today to a record high. It is up now 2.5% to $43.60 the ounce. And crude oil taking a breather. It is now at $57.52 the barrel. Shares of Apple, we've been talking about it all day long, hitting their first record of the year after Loop Capital upgraded the stock to buy from hold, citing strong demand for the iPhone both here and internationally. Also, rare earth and critical mineral stocks are in the spotlight after President Trump signed an agreement with Australia's Prime Minister to boost access to critical minerals and rare earths. That's after China moved to limit its exports to the U.S. We've got shares of Cleveland Cliffs up now more than 18% after quarterly earnings beat the street. Company also said it discovered 2 sites with the potential to produce rare earth minerals. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back over to Carol and Tim.
All right, so appreciate it. Alexis Christoforous there in for Charlie. Carol Massar along with Tim Stenovec here at Bloomberg headquarters in New York City. Well, check out, we heard Alexis talking about this rare earth and critical mineral stocks. They have certainly been on the move. rising as William Blair analyst Neil Dingman initiates the companies as outperform as he sees the government potentially taking a stake in them. Among the stocks named, United States Antimony, with William Blair's analysts seeing the U.S. government taking a notable stake in the company as the U.S.'s only antimony producer. Shares of U.S. Antimony, by the way, are up nearly 565% year to date. Yes, you heard that right, with about 14% of the float short. We're seeing these stocks on the move today.
Back with us once again for the first time since August is Gary Evans, chairman and CEO of United States Antimony Corp. More than $1.6 billion market cap mining milling company, refines and sells antimony products. He joins us from the Bloomberg News Dallas Bureau. So the analyst at William Blair out saying that the U.S. government could take a notable stake in the company as the only U.S. antimony producer. Gary, do you see the U.S. government taking a stake in the company?
Well, it's something we don't, stay up at night worried about. We've been very fortunate in that the U.S. government has given us an incredible contract. This is the DLA, which is the Defense Logistics Division of the Department of Defense. We won a $245 million sole source contract about a month ago. And so we're working hard to fulfill that contract. And what that is antimony ingots that's used for our defense to hold in stockpile for future wars.
So can you fulfill that with the capital structure that you have right now? Do you need more money in order to fulfill this?
No, fortunately, we've raised over the last month and a half about $100 million of capital. So we're sitting on a lot of cash. We have no debt, and we actually have revenues, cash flow, EBITDA, and net income, which is unusual for a small mining company. We did announce, though, on yesterday, of our attempted takeover of a company in Australia, which is a large antimony as well as gold producer.
Larvotto Resources.
Some new mine starting. Exactly. So what that does for us is it adds additional value. In fact, with our reserves and Larvotto reserves, we'd be in the top 5 of the world, which is something I think both the Australian government and the U.S. government really would like to see.
Yeah, and I just want to dig a little bit deeper. What kind of tonnage of antimony would this be in terms of this deal that you're making with Larvotto?
Well, you got to understand that Larvotto is just a miner. They do not do the refining end, which is what we do. So we have a smelter in Thompson Falls, Montana, and we have one in Madero, Mexico. So the one in Montana is being expanded significantly, 5 times greater than what we currently produce. That expansion will be done in our first week of January. The smelter in Mexico, we could expand that probably 5 to 6 times as well. So what this resource that Larvotto has, we can bring to our smelters and make a finished product, not only for the government, but we make products for 7 other customers. People don't realize that antimony is used in many, many different things, and especially with the new AI technology going on. We make fire retardants for roofing materials, which all these data centers require, and then we make typically in most electrical cords to keep them from catching fire.
Wait, so it sounds like important. And I'm just curious how much you guys are paying. Can you share anything in terms of this company that you're buying? How much?
Well, yeah. So we did make an offer. We already own 10% of the company. So over the last 30 days, we've been quietly acquiring shares. It's a company we've been looking at for 9-10 months, and we wanted to wait till the appropriate time. So we bought stock. We own 10%. We announced that we're required by the Australian government to do so, and then we made an offer to the management of the company. And the offer is basically, we will give them 6 shares for every 100 shares of their stock. So if you looked at the valuation, it's a $400+ million transaction.
Okay, good to know. I want to go back, though, to what Tim asked you, Gary, initially about William Blair's call. I mean, are you guys talking with the U.S. government about them taking a notable stake in your company? Are you working on a deal? Is there anything going on right now?
Well, obviously, those type of discussions I can't really talk about. I will tell you, we've been working with the DOD on a grant. We've talked about that publicly.
We have, yeah.
We're hopefully at the final stages of that. And I mentioned already the contract. So the timing of the transaction with Larvotto couldn't be better. Obviously, the Prime Minister of Australia was meeting with President Trump today in the White House, and I'm pretty certain this deal was discussed. So anyway, I think that what we've got to do as Americans is realize that China has a 100-year plan, and we're not part of that plan. And we, as the largest antimony producer in the United States, want to build those reserves and resources and not be dependent upon a country that is not doing things in our best interest. So it's not only antimony, we're involved in tungsten, we're involved in cobalt, as other rare earth companies are also moving into the space. So we're trying to step it up, and we think a collaboration between the United States and Australia is a great way to do it.
You just said that you're pretty sure this was discussed between the two leaders today. How are you so sure that was discussed?
General Jack Keane is on our board, so does that help answer your question?
It does. Thank you.
Okay.
I know Carol had another.
Wait, did they call you? Did they call you to talk even a little bit further about the possibility of this?
No. But
do you want them
if you look at what the discussions were about, it was about critical minerals, it was about rare earths and a collaboration, and this is obviously what we're doing.
Do you want the United States to take a position in your company?
Not necessarily. We've access to capital is not an issue for United States Antimony. We want to do what's best for our shareholders and what's best for the country. Right now, we think that we can accomplish those goals as an independent company without shareholder ownership. If the government comes to me and says, hey, we definitely want an ownership position, then that's a different story. I'm not really in a position to talk about that at this point, but you can see the close alignment between the United States Antimony and the U.S. federal government, and it continues to strengthen. We talk to them almost every day about different things.
But do you feel like you need a U.S. investment to maybe, I just feel like, do the companies that get U.S. investments in the mineral space, if you will, have an advantage over those that don't?
I'm not sure what the investment does as an advantage. If you need capital, that's one thing. We don't need capital. We have plenty of access to capital. As you noted when we first came on the air, we've had a tremendous run in our stock, and it's because we have access to antimony. We started mining our first antimony mine in Montana last week, brought 7 loads of trucks down the mountain. So we are actively mining. We're the first fully integrated antimony company in the world outside of China, and we're happy about that. We think Larvotto will definitely add to that equation.
Got to say, we never have enough time with you. This space is certainly on fire. Gary Evans, Chairman and CEO of United States Antimony Corporation. Stock is up 15% in today's session. This is Bloomberg.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, coming into the last hour of trading on this Monday in just a moment. You've got stocks just rolling off their best levels of the session. We've got a rally underway. We're up about 1% on the S&P 500. Same thing for the Dow, 1.3% higher on the NASDAQ 100. A lot of that has to do with a few big tech names in particular, maybe one in particular.
Is it a fruit company?
Sounds like
okay.
It. Sounds like Snapple.
Snapple, but it's not Snapple.
Such a Monday.
Carol is back.
I am. You're back.
I'm back. We're both back.
I didn't go anywhere. I was here all week. You were away. I was like, where is he?
I just meant you're not quite back from the weekend. That's what I meant.
I'm not. Here it is, almost 3 o'clock on a Monday afternoon. I could use another cup of coffee. Okay,
well, we'll put the order in for you. In the meantime, I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg Television Markets correspondent Norah Mulinda with today's stock movers. All right, let's start with the big one, Norah.
A stellar day that we're seeing right now for shares of Apple. That's ticker AAPL. As you mentioned, it is hitting a record high here. This is the first record high that we're seeing of 2025. And this is after the company said, essentially there was some data that came out that showed that iPhone 17, the series for that iPhone outsold the iPhone 16 by 14% over the first 10 days, if you were to look at it respectively here. And that's for sales in the US and China. So, of course, you just are seeing them kind of knocking it out the park, hitting a record high here. But I mean, of course, if you still look at shares year to date, but they're up about 5% now. That's different than what it looked like earlier. That we're seeing a pop into the green clearly. But I mean, we also did see Loop Capital upgrading the stock to buy from hold. Lots of optimism right now in the market for this company.
Can I just, a little self-promotion for Tim and me? But we had a great conversation with Mark Gurman about all things Apple, and I highly recommend, if you missed it, check it out. It'll be on our podcast feed a little bit later on. Can I do a little self-promotion?
You can do it. $3.9 trillion. That's what the market cap is right now.
I know. If I was Matt Miller, he'd be promoting it. just saying. Let's go to App 11. What's going on?
Yes, to keep it easy for us, the ticker is APP app. Shares are down as much as more than 7%. Now they're paired a bit, up down about 3.8%. This is after the New York Post reported that the state regulators have reached out to multiple short sellers in a possible preliminary probe on the company here. So the states involved in this concern are Delaware, Oregon, Connecticut, this all according to the report. But if you do look back earlier this month in early October, we had the SEC that was probing the company in terms of its data collection practices. So lots of heat right now on this company. Shares are up, though, 78% so far this year.
Okay, one stock that has been moving since before the U.S. market opened this morning. This one was kind of the first one on my radar today, Norah. What's going on?
BNP Paribas, ticker, we're looking at the US ADR, so I'll give you BNPQY if you want to look it up. Shares are down about 9% right now. As you mentioned, a lot of activity that we saw in the pre-market here. This is after a trial loss over past work in Sudan. They're saying that this could lead to a costly settlement here. And analysts are really saying that they don't expect a massive settlement cost here, but they do flag rising uncertainty here and pertaining in particular to this stock here. But BNP is saying that it should be overturned, but they did add that it doesn't have any pressure to settle this case here. So we'll just have to see how this one plays out. Shares up about 30% so far this year.
Help me understand, though, the market cap on the ADRs is about not just shy of 91 billion, but my understanding is if the litigation was expanded out to all the cases, could be something like 140 billion. Did I see?
Right. I know. I was seeing that as well.
How could so maybe investors just believe that they're not going to end up having to pay out that much, or it won't go that far. There'll be some kind of a settlement earlier on. That's a lot.
It's a lot.
It is a lot.
More than the market cap. Just saying. Right?
Some big numbers here.
I don't even know.
Good stuff. Thank you, as always, Norah, Mulinda, of course, Bloomberg TV markets correspondent. For more conversations, be sure to check out our Stock Movers podcast. They are 5-minute episodes of the biggest winners and losers in the stock market. We do it throughout the day. You can find it on Apple, Spotify, or anywhere you get your podcasts. Tim, we've got a rally underway.
We do. It's a broad-based rally, too. Yeah. More than 400 stocks in the S&P 500, 416 to be precise right now, are higher, 85 in the red. The S&P 500 up more than 1.1%. The NASDAQ Composite up 1.5%, and the Dow up to the tune of more than 530 points. That's 1.15%.
Let's not forget, we do get some earnings after the closing bell. Zion's Bank Corp is going to report. That stock is up about 4.25%. That's after losing, I think it was about 5% in last week. We know under pressure, concerns about credit exposure. And so while we know a lot more, because we've heard from the bank, we will still be keeping an eye on what they have to say to see if there's any other signs of cracks.
Moving forward later in the week, too, we're going to be hearing from some of the big automakers about record EV sales for the month of September as consumers rush to take advantage of expiring federal tax incentives. Keith Naughton is our man in Detroit. He's going to be joining us in just a few minutes. Also, it is the cover of the current issue, the new issue of Bloomberg Businessweek magazine. Gavin Newsom, the California governor, is he the man to take on President Trump? That story written by Josh Green. Josh is going to be joining us a little bit later, too.
Looking forward to that. I have a lot of questions about the story, but also just about politics in general, in terms of where Democrats are. And I don't know, as we get ready for some elections, governors races, mayoral races. So, mayor race here in New York.
Here in New York.
It's a big one.
Coming up in just a few weeks.
All right, stick around, everybody. The close is coming your way on TV. Tim and I continuing on Bloomberg Businessweek Daily.